Good morning, everyone. Welcome to the Modern Market. This is our daily show from Monday to Friday at 7 a.m. Eastern Time, 12 p.m. BST, every day of the week where we discuss all things to do with the modern market. That is the crypto market, the NFT market, and frankly, any other market that operates online where we think we can make some or a lot of money. I'm your host, B-Check. I'm joined by my legendary co-host, Legendary. We're live on X. We're live on YouTube as well. Please do follow the Modern Market Twitter account and the YouTube channel. Like and subscribe too. That helps us out a lot. And we're on Spotify and Apple Podcasts as well. So 5 stars on either of those platforms would be very, very welcome. Appreciate you for being here with us. Let's get into it in just a little bit. But before we do that, as a reminder, nothing that we say here is financial advice. This modern market is exceptionally risky and we don't know anything for sure. So please do proceed with caution and exercise your own judgment. With that out of the way, Legendary, it is Tuesday. It is the 18th of June. How are you doing? How are you feeling?
Doing quite well. It was a good start into my day. I didn't farm a lot this morning, but I was playing a bit of Spirit Force Arena, one of the games in the Avagotchi ecosystem. Had fun doing that, and quite excited for today's show. Very excited about what's going on in the JPEG market.
Why? Why are you so
You
excited?
seem confused that it sounds so excited about it. Because
I'm
I feel like this is going to be a show for spicy takes. It's going to make good clips.
Okay. Okay. Well, I'm looking forward to those. Glad you mentioned what's going on in the JPEG market because after a lot of time of just kind of maybe trundling along, going lower slowly over a period of time, we've hit an absolute point of collapse or breaking point. We're going to explain why, obviously, one of the largest liquidity providers on Blur has removed all of their liquidity now. So a lot of the bids that used to sit there are now not there. And we're going to find out truly what the price of a fine JPEG really is. So we're going to get into all of that. There's going to be a lot of analysis to be done there, looking at both the NFT market itself, the lending market, so you can see a little bit behind the scenes. We might even look at the perpetuals market as well, if possible. Legendary. Anything else before we hit the headlines and get into everything?
Let's get into it. I can't wait to start today.
Right, let's do it. As always, I am going to share the screen. We're going to get into the snapshot, which is pinned up top. If you do find it brings you some value today, please do give it a like. That's where all the information is coming from. Getting into the price action, Bitcoin is just down 1% at 65.6K, showing quite a lot of strength if you think about it relative to how the sentiment is in the market and how other things are going down. ETH is down 3% at 3.4K. Solana is down 5%. Dipping beneath $140 at $137. First headline is NFT market is collapsing as CBB, which is the name of the huge account, pulls their bids. So that means now Penguins are down to 8.6 ETH. That's down like 16% in 24 hours. Bored Apes are beneath 10 ETH now at 9.2. Milady's, obviously, as everything else is collapsing and going down, Milady's are up 7%. We're going to dive into a more broader look at all the price action in just a little bit and the reasons for that. Number 2, Tether announces a synthetic dollar, which will be over collateralized by gold. That is very interesting. We'll get into some of the details of that too. And then finally, DJT is up 460% on rumors of Trump making it an official coin. That came at the consequence of all of the other Trump coins that are out at the moment. Trump was down 33%, MAGA was down 20%, Tremp was down 30%. Even Bowden felt the force of a different Trump coin coming to prominence, as that was down 35% too. Kind of these meme coins getting crushed in general at the moment. Real pressure on all of those coins for the moment. Getting into some NFT price action, we've got CryptoPunks down another couple of percent, sliding down to 26.3 ETH. Bored Apes down at 9.1, down 12%. Mutants at 1.6, down 10%. DGods down 10% to 0.8. Captain's down 7% to 3.1. Azuki's down 5% to 3.5. Penguin's down 16% to 8.6. Mad Lads on the Solana side, chilling. 66 Solana plus 1%. And the Nouns winning bid was at 5.4 ETH. Legendary, that is the price action. Those are the headlines. Felt kind of strange reading those out. Everything really spiraling, tanking. Uh, let's just get to that straight away. Maybe we'll look at some other things in the market in just a moment. But what's what's your read here as we see on the Mintify heat map? Just everything is red.
Yeah, the Mintify heat map looks like on the ETH side of things looks like the Blast heat map. It's all red, with the exception of Milady's being up 1%, Persona basically chilling, Nexian Gems, that gaming asset is down 7% on the day. But other than that, everything is down bad, and there's good reasons for why the collections that are up or not as down bad as the others. But I feel like that connects so strongly into the first news that we maybe should start by setting that up and then getting into the discussion. Do you
Okay.
want me to set it up?
Um, yeah, why not? Why not? And I'll add anything if I need to.
Absolutely, yeah. So CBB, the two brothers farming Blur for the third season and being in the top spot for 180 consecutive days, having made more points than the rest of the top 50 combined. The two of them had announced that they, for now, are going to stop farming Blur, and by doing that, also stop providing liquidity in bids and in loans. And by basically pulling all of those bids, a lot of the liquidity on Blur went away. CBB went on to explain what the next plans are. They said basically that for the last 7 months, they've been getting up twice a night to check on the floor prices, to check on the status of the bids of the loans, and they're like quite happy to go back to a more regular sleeping pattern and rhythm. They do want to come back into the market after the Blast TGE. A few weeks of touching grass is what they announced, and then they will deploy a new strategy to provide medium-term loans to NFT collections. And now it gets interesting, such as Pudgy, Milady, and Remilio. And then the last sentence of that post is not touching anything related to Yuga Labs, which probably also explains why Apes are down bad in terms of the bids. Obviously, Pudgy's had a very strong correction too, despite CBB voicing their support for them in the midterm. However, with Pudgy's, and Cyrus had a very, very good post on that, the loan situation looks pretty terrible. Cyrus was saying it's easily the worst the Pudgy loan book has ever looked. 100 underwater loans on Blur alone, another 100 on Bentao, another couple dozen on other platforms. This reminds me of the Mutant loan book when they went from 5 ETH to 2 ETH. Need big buyers to step in, or it's gonna get ugly.
Okay, well, that doesn't sound too positive at all. As you said, there's a few different bits of interesting information here. Maybe two directions I definitely want to take it, and then maybe more, but we'll see how we go with it. We definitely want to talk about CBB pulling the liquidity, and what the market is like actually looking like as a consequence of that. So let's do that first. And then second, Cyrus obviously is always keeping one eye on the loan book. I'm also always keeping one eye on the loan book. So I definitely want to go in and I'll do some live analysis, looking at Blend, showing everything on screen, explaining how it works. So if you are not super familiar with the NFT lending market, let alone the perpetual NFT lending market, which is how Blend operates, then I would recommend watching this one on screen. And as I said, we're live on Twitter on video, we're live on YouTube on video as well, because I'll explain what it all means and how it looks. And when people are saying it looks really bad, there's always this chart that people look at, and when you are familiar with it, you'll know when it looks bad. So I'll go through that in just a little bit too, if you're interested in kind of watching that, but I'll describe it as well for the people who can't see. Okay, let's get into the actual effect of CB pulling the liquidity. Just one interesting point that you didn't mention, Legendary, for people's interest. He actually stated as well that he's down $4.5 million from farming Blur. I've got the tweet here to share that. He said, if a few years ago someone had told me we would be totally fine to lose 4.5 million, not sure we would have believed it. So
Sorry, one quick addition to that. Cyrus has also estimated, just to put that into relation, that CBB they will walk away with a low to mid 8-figure airdrop. That is what Cyrus estimates to be the reward for losing those 4.5 mil farming.
I mean, gotta hope it's linear then, right? Like this is one of the things I think is really risky in this space. You know, you're going to take a 7-figure loss and not be guaranteed on the way that the airdrop is going to get allocated. Like it's not a guarantee that airdrops are allocated in a linear fashion, and the more that you do volume, like you'll obviously get the be in the top bracket, but it might not be as high as people suggest. Legendary, did you want to come in there?
Yeah, I highly assume that CBB is speaking with Pac-Man, because essentially CBB is, or what has been, the market maker for the entire JPEG market period. So I would be surprised if the two of them and Pac-Man don't have a direct line of communication.
Yeah, I mean, I agree with you. I think that it kind of makes sense, but at the same time, we're in crypto, and I would always caution any kind of logical assumption sometimes, based on how people kind of go about business. And yeah, we might assume that that would be the case, but sometimes people are quite gung ho in this arena. So let's see how that works out. As I said, I wanted to go into the actual market itself to see what everything was looking like. And as you can see on Blur here now, the prices are pretty aggressively down. You got Pudgy Penguins down 18%, Bored Apes down almost 10% to 9.2, Mutant Apes down 11%, Mockverse down a couple of percent, Azuki's down 5%, Lil Pudgy's down 16%. So Lil Pudgy's tracking the bigger collection, which is now down 18%. Captain's down 3%, DGod's down 10%, CloneX down 10%. Like just scrolling down these collections, everything is red. Legendary, any kind of commentary on just the down price action before we maybe get into the lending side of stuff?
Maybe one bit that I found interesting, forgot to mention, is that actually captains and potatoes are also not down that much, they're down like 3%, and more in term with or more correlated with how ETH is moving, and as a proxy how the meme coin price is moving. So it seems that now the tokens who have, and you can apply that for Mochaverse as well, who have a token claim that is vesting or that will be vesting in the case of Mochaverse, are not as strongly affected by this bloodbath as the other JPEGs that don't have that.
Yeah, I think that's true. Also, a point to make is the collections which have leverage provided for them via blend seem to be affected worse too. So, you know, captains, for example, you cannot do the lending on Blur with captains, because I think they ruled it out at the beginning. They said we don't want our collection to be a part of that. Mochaverse also are not a part of that ecosystem. So the ones which had racked up like huge amounts of leverage are also the ones that are unwinding the fastest here. One final point, maybe before we get into the lending side of things, just thinking about the incentive structure and how people have kind of viewed Blur up until this point. Stats had this to say earlier today. I wanted to hear what your perspective was on it, Legendary. He said the Blur bidding incentive structure first scared away any real market participant who knew how destructive it was. Then it scared away normal players who were tired of the pump and dumps. Then it scared away the farmers. Now it scared away the king farmer. And with everyone now gone, they say, haha, where's your liquidity now? Told you this incentive structure wasn't a problem. Where do you stand on this kind of incentive structure that has created this type of market, which is so dependent on farmers to provide liquidity? But the problem is those farmers who are providing liquidity have absolutely no intention of holding the asset. What's your stance?
I agree with Stats's take like 90%. Like, yes, the incentive structure led to normal people being scared away, to farmers being scared away. The two things that I don't agree with, I don't think CBB is scared away. That's, to me, not the right term. I think they just want to hit on the airdrop, take a bit of a break. They've been grinding this shit nonstop and like evaluate what the next steps are for them. And B, I also think that, yes, Blur is exacerbating the situation. It's making it worse. but it's per se still a JPEG problem because people just don't want the JPEGs because they don't see a reason to have them, apart from the blur farming to a large extent. So I think that maybe my take would be blur is making a worse or a bad situation a bit worse, on the one hand, and on the other hand, certainly don't think that CBB is scared of the current state of the market.
Yeah, I think that's fair. I think there was a point in time when I thought I was more inclined to think that, well, the market is just the market. You can't blame the market when, when the price goes up, it's not the farmer's fault, right? And so when it goes down, it's also not the farmer's fault. But I do think it's created this false incentive now, and I'm kind of aligned with stats on that now, where you can't have a market where the main people holding the asset or main people providing liquidity have absolutely no intention of holding it, especially in an environment where the demand is suffering. Although an interesting point, and this may be a question, I'm just thinking out loud here. One of the I think this a deeper question on frictionless transactions, and it seems to be the case that the more frictionless transactions become, the more likely that assets become more volatile, because there's just it's basically becomes too easy to list and trade and do all these things. And I wonder whether sometimes I think with traditional assets, for example, like, I don't know, great paintings or great sculptures, if all of the holders in the world were able to list in some frictionless way and be able to undercut the floor in some frictionless way very, very quickly with no intermediary, would the asset prices of those things collapse as well? Because as soon as people are become aware that there is a seller willing to sell at a particular price, then they get scared, and then they might think, well, I don't actually need this asset, I don't want it, I thought that it was this price. And the people who are involved in the sales of those assets, they're actually kind of all working together to maintain price. Whereas in this environment here, no one's really working together to maintain a price. You've kind of got misaligned incentives. You got any reflection on that, Legendary, before we hit the
There's
kind of lending
actually
market?
a good real life example to that played out during the pandemic, or did not play out exactly because of that friction. In the pandemic, we've seen the collectible hype around Pokemon cards, especially base set, gym heroes, so all the pre 2000 sets from basically back in our childhood. And suddenly, when all these prices were pumping, this one YouTube video went viral with a guy's collection that appeared out of nowhere, and he had 20, 30 Charizards from the base set. Same with Blastoises. Basically, all the holos, all the rare cards, he had them, and everyone's like freaking out. Shit, this collection is worth more than 3 mil. If he's gonna put them on the open market, he's gonna crash the entire Pokemon card market that we so eagerly pumped up during the pandemic. Turns out there is not that much liquidity for it. Yes, you can trade them online, peer-to-peer on platforms like Card Market. You can't really go to card shops. They're just going to rip you off on the price because they need the margin. So that was a situation when someone actually had a collection that could have tanked the entire market, but there wasn't just enough frictionless liquidity to throw his supply on the market. And for that reason, it really did not happen.
Yeah, it's an interesting one to kind of mull over and think about, because everyone always wants to move towards this hyper frictionless trading environment in this space, because you think the easier things are, the better things are. And I've actually started to wonder whether that is not the case, because I don't know if we have evidence for that, particularly for these specific types of assets, at least. As I just shared on the show, on-chain metrics in the YouTube comment saying, sell your sculptures now before blur arrives. Maybe one day there will be blur for real world assets. Let's see how it goes. But as I said, I was going to do a bit of a deep dive on the blend market, which is the perpetual lending market native to blur, to kind of show you why Cyrus is saying something like, this is the worst loan book I have ever seen. So as I just said, if you are not familiar, or even if you are familiar and you want to kind of understand a little bit more of what it means to have a terrible loan book, I'm going to explain that now. So Again, we're live on X on video, live on YouTube on video. So I'll do my best to explain it for those who are not watching as well. I'm going to click into the Pudgy Penguins collection. When you click on loans, you can see this chart. What this chart looks like is you've got the floor prices down the bottom, and you've got the interest rate being the interest rate on the y-axis. And all of these dots that you can see scattered around represent different things. So all of the green dots represent loans that are currently being made. So for example, this one that I'm looking at right now is a person who has borrowed 4.75 ETH. The APY is 23.7%. And what you expect to see is like this kind of healthy arc of a chart where the lower the amount you borrow, the lower the interest rate, and then the higher the amount you borrow, the higher the interest rate. And this chart kind of does look like that, right? Like roughly speaking, the interest rates are admittedly like very, very high right now. So you can have loans which are a 4 ETH borrowed amount when the floor is at 8 ETH. So that's only a 50% loan to value, and you're getting a 30% APY. So that's like a relatively high amount of interest to be paying. But nevertheless, still broadly speaking, you can see this kind of relationship between borrow amount and interest, which is as one goes up, the other goes up in a reasonable proportion. Having said that, why did Cyrus say that this looks like one of the worst loan books he's ever seen? So you can see the green loans, which are the ones which are taken already. However, when you take green away, which are the active loans, you press that little button. Now, all of the gray dots are the loans which are in auction. So all of these loans are basically looking for lenders. When you're operating in the perpetual lending market, this is what happens. You take a loan out, you give a loan to someone, and both parties can basically cancel the loan at any time. So if the borrower wants to pay you back the next day, they can do that. They pay you the small amount of interest, that's fine. But equally, if you are the lender and you decide that you don't want the loan anymore, as long as you wait 24 hours on Blend, you can cancel it. When you cancel it, the way that the market guarantees that you get paid your interest, whether that's after 1 day, 7 days, 14 days, is the loan amount which you gave. Say I give a 5 ETH loan against a Pudgy Penguin, and I've given that loan at 20% interest, and I've had it open for 14 days. After 14 days, I don't want it anymore. I don't want that loan. I want to cancel the deal from my end. So I go to Blur, I click cancel, and what will happen is it goes into a refinancing auction. So the amount that I paid, I lent was 5 ETH. Maybe I've earned, I don't know, 0.04 of interest in that time. So 5.04 ETH will go into a refinancing auction, and basically those become these gray dots, which are described as loans in auction. So basically, the amount that you are now owed gets paid by the next person. So the only way a lender gets paid is if there is another lender to pay them the interest, or the person sells their NFT at a higher price and you get paid back that way. But when the loan goes into a refinancing auction, you're basically waiting for another lender to pay for your debt plus your interest. So the reason why this is such a bad loan book is because you can see God knows how many active loans which do not currently have a lender. Now, what happens if no lenders arrive? So you can see all in the top right-hand corner, you can see all of these loans which are for a value which is higher than the current floor price. The problem with that is obviously that no one is going to step in and take that loan now. I don't want to give a 9.2 ETH loan to someone when the floor of a Pudgy Penguin is 8.3. So what's going to happen at the end of the refinancing auction period of time? These assets will basically get liquidated. They will go to the lender, who is going to be down on their asset, right? Because they've lent I'm looking at this one. A lender has lent 9.57 ETH on this penguin. No one's going to step in to take that. So they're going to get that asset. But now the floor price is at 8.3 with only a bid at 7.86 ETH. So if that lender has no intention of holding the asset, what are they going to do? They're either going to list it at the floor price, hoping that someone comes in to buy it, or they're just going to sell it directly into the top bid. And you can see all the bids here. Now, another thing about why it's so bad is because, as you can see, the number of active loans are huge. And you can actually click on this tab as well to see the extent of all of the loans that have a higher than 100% LTV value at the moment, which means that they're basically higher than the floor price. I would estimate, I mean, Legendary, you can see this as I'm sharing it. There's probably, I don't know, we can't count this one by one, but there's way too many to count. I would estimate there's 100 at least above a 100% LTV, which means, you know, there's going to be no lender for those. They're going to get liquidated. And then the question is, what do people do with that? Do you have a long-term holder who's like, no, I want to hold the asset, or do I need to liquidate immediately for 7.86 ETH and just take my 1.5 ETH loss? Because that's the loss that they'll be taking, right? Say they lent 9.5 ETH, the bid is now at 7.86. They get the asset gets liquidated and they sell for 7.8, and the delta between the two is the loss that they will take. Who knows? That could be a better than taking a much bigger loss, right? So that's what's going on there. And as I said, you can kind of look at the depth of the bids now, because remember, on Blur for a long period of time, these bids were significant. You would see like thousands of ETH in bids. You'd see like multiple bidders. What it looks like now is probably a slightly different picture. Again, there's probably still farmers involved in this amount of bidding too. So it's no guarantee these are real buyers either. But you've got, you've got 13 bids at 7.86 ETH. You've got, these are all changing live as well. I suspect there are bots involved in this. But, once you get past this kind of wall at 7.86 ETH, you've just got like single or very low number bids at each price. The number of bids in the 7 ETH region is pretty thin. You get down to the 6 ETH region, there's not a whole lot there. Obviously, these bots are going to move their bids down in line with the price. So I wouldn't be so scaremongering to say like, oh, there's only 5 bids in the 6 ETH region. No, what will happen is the bots or whoever's farming, they'll end up moving the bids lower so that they can maximize their blur points. But the depth of the bids has obviously been reduced significantly now that CBB has pulled the bids. So that is what it means to have one of the worst loan books that you've ever seen. An incredible number of penguins that are underwater, which means their loan to value ratio is greater than 100%, which means the amount given as a loan is way more, or not necessarily way more, but just more than the current floor price and the top bid. And it doesn't look like there's going to be any lenders to step in for a number of these, which means they'll get liquidated, which means they'll probably have to get sold into the market. Legendary, that's my explanation. I hope that was helpful for people. I hope it makes sense. As I said, watching this on screen is probably the best way to consume that. But I hope that was helpful for the people just listening in as well. Any thoughts, commentary, questions, Legendary? What are you thinking? What are your thoughts after that?
Yeah, I think that's a fantastic and very, very helpful explanation. Maybe just adding to that, because I saw it yesterday and I found it strangely or weirdly entertaining, was War Daddy Capital posting that when CBB pulled their bids, by doing that, they broke the Bent DAO Oracle. It just had wrong prices altogether. So there's even secondary effects of that on other platforms. And again, there's a lot of loans on Bent DAO underwater as well. And I think in a situation like this, and that's maybe the only point that I would add to your really, really helpful explanation, is that it's just going to take days, if not 1-2 weeks, to fully see that play out, to see exactly what you said, when those loans won't find a new lender in the re-auctioning. What will those new holders do? Will they dump the price further? Will some of them be happy to hold the pudgies? So I think it's just going to take 1-2 weeks of those loans cascading down for us to fully understand what the effect is of CBB pulling their bids and what quote unquote the true floor price of our JPEGs is in absence of the blur incentive mechanism. If we will even get to that, because we will have Blast TGE in 9 days. Yes, CBB said they're going to take a bit of time, and I think by the time that Blast TGE goes live, we'll kind of also know what happens with the next season of Blur. Is there going to be one? How will that look like? But for people who say, oh, it's like only a 10% correction, or it's only a 15% correction with some collections, we haven't seen the full effect yet. Those things will take a bit additional time to like play out and to find a true bottom in terms of the price.
Yeah, the only thing I would say back to that is I think it's going to happen way faster than 2 to 3 weeks. Like I think this stuff will unwind aggressively over the next day, two, and really there'll need to be a resolution pretty quickly. Like let me just show you one thing else so people understand the time frames on this, because I don't know if people know this. When I mentioned that these things go into a refinancing auction, they go into a refinancing auction for 24 hours. So again, I'm showing this on the screen. The way that you know this is you can go to when you go to the loan section and then you go to all loans. And here you can see all of the loans that are in auction. And as I said, absolutely outrageous number, really, really high number. But you can see also the time, the little clock here. So this one's got 11 hours left until liquidation. This one's got 10 hours left, 11 hours left, 52 minutes left. So this one, for example, that I just looked at, 9.7 ETH borrowed, it's 100%, 117% LTV. That means that, you know, it's probably not going to be a lender in 15 minutes that will get liquidated to the original lender. And so that will potentially come to market if that lender does not want the asset itself. So as you can see, 10 hours, 22 hours, 7 hours, 7 hours. So all of these will be on a different schedule, right? Because it will depend on when the current lender said cancel loan. And from that moment on, sometimes there's actually cases where there's already like a standing bid, because you can place loan offers out as well. So when I canceled mine yesterday, I had 3 Pudgy Penguin loans out, one for 7 ETH, one for 5 ETH, and one for 3 ETH. Very fortunately, someone paid me back on the 7 one before this happened yesterday, which was very nice. But the 5 and 3, even though that's such a low, I'll just talk through my thinking so what people can understand this. Like that's such a low loan to value ratio, and that's usually how you assess the risk here. Anything in the NFT market, I would say people have felt, at least up into this point, around 70% loan to value for a very premium asset. You'd feel relatively comfortable that you can get out of in case of a disaster within 24 hours. So that's like kind of the top end of the risk profile for me, because I've seen that number kind of being appropriate. So the 2 loans that I had were at like 5%, sorry, not 5%, 50% loan to value and 30 to 40% loan to value. So not in danger. And I would argue potentially even now at this point is still not necessarily in danger. I mean, fingers crossed, who knows how bad this liquidation cascade will get. But I didn't feel that those numbers would necessarily be reached. But having said that, you just don't know how aggressively this stuff sells off. You don't know how many of these bids have been pulled. So I felt the safest thing for me to do yesterday was to just say, look, I'm not providing liquidity on these things anymore. And they were actually taken immediately by someone else. So I managed to get all my money back. And usually if you act quickly and your loan to value is low enough, you can get out fairly safely in that respect. Obviously, if my loan to value was much higher and say it was 90% loan to value, and then I tried to cancel the loan, and then in 24 hours time, look, the price is already down 19% in the last 12 hours or 15 hours or something, I would already be underwater. So that's why you want to kind of manage the loan to value and make sure it's like a fairly reasonable one, or not too scary in that respect. Legendary, do you want to come back on anything there? Any further questions, thoughts?
Yeah, one additional comment. I had a look at NFT Perp. Also
I
sharing
wanted
my
to go on to this
screen,
as well.
on that, just to have a bit
You
of an
share.
understanding on the funding rates.
Good.
Um,
Let me share it as well. One sec. Here you go.
if you want to short pudgies right now, which is what everyone is obviously doing, the funding rate, the hourly funding rate, is at negative 0.11%. Annualized, that's, I'm going to explain that in a second, that's a 985% funding rate. So that basically means if you're shorting pudgies right now, you're paying 0.11% of your short value hourly as a funding rate to have someone to take the other side and go long on that deal. And that is outrageously high and in
Does
this moment.
does that almost make it not worth it potentially? Like would that kind of, I mean, would that kind of offset any potential gains that you would make by by winning on the short if the cost of funding is so high, which you still end up needing to pay anyway?
It depends on what your price target for the pudgies is and how fast you think this whole situation is unrolling. Like we've seen them, I think NFT Perp even had to pause overnight from what I gathered on the timeline, because I was obviously sleeping through most of this from a European perspective. But if you say that you think that situation unfolds over, say, the next 2 days, and you would think pudgies go from, say, 8 to 6, dumping another 20 plus percent, almost 25%, and you pay 0.11% per hour, then you pay 5-6% on that. It would still be profitable if you think that pudgies move down 10+% over the next 1-2 days. But it's obviously getting to a point where clearly the majority of the market is shorting JPEGs and especially also shorting pudgies right now, that it's almost not even worth to short in this market.
That's a good point to make, because I think a lot of people might try to rush to that thing without properly understanding the funding rates. To be perfectly honest, I don't think I understand it perfectly. I kind of uh, am experimenting for the first time with like shorting assets, longing assets, and stuff like that. One of the things I actually did do yesterday was go to Wasabi as this stuff was happening to see if it was possible to short and see what the potential would be. But I don't know. You mentioned NFT perp not working yesterday. Wasabi, I couldn't get the short that I was looking for either. So I don't know whether that's just something in the functionality when the price was going down so aggressively so quickly, whether that stuff just isn't able to operate because of the mechanics. Remember, it uses the floor protocols tokens as part of the shorting. Well, NFT perp actually operates on a different model. That's how Wasabi's does, because it's asset backed perps. So like there's a whole kind of world to dive in there to figure out like how these different markets actually facilitate your longs and your shorts. It's probably out of scope for today's show. But yeah, I tried to get one and I couldn't get it to work. But any other reflections, Legendary? Otherwise, we've got a couple of hands here. I've got a couple of comments in the Twitter comments too, which I think we want to get to.
Yeah, happy to hear from Oxy and Funky. Very curious what their thoughts are on the market, and I definitely will have something to come back on as well.
Got it. I just want to do a quick shout out, maybe take questions from the comments first, then we'll get to Funky and Oxy in turn. 701 Private Club, seen them in the audience very, very often. Good listener of the show, has said many NFTs, especially the most popular and expensive ones, do not add anything to their holders. There are exceptions, but most of them are just tools to get value for their community. Selling merchandise and bringing out other collections, something quite absurd, in my opinion. Well, I guess we'll find out how valuable the community how much the community values the NFTs as now the liquidity has got pulled. Jacob Aloba asked this question, Legendary. Maybe you'll take this. I think we alluded to the answer earlier. Is this affecting the whole NFT market?
Yeah, it's definitely affecting not the whole, but the majority of the NFT market. CBB was a lender in some of the biggest collection, and again, he also said in the midterm they want to continue lending, but they won't touch anything Yuga related. Is the current stance, but it's definitely trickling down to other collections as well. That even when CBB wasn't the biggest bidder, wasn't bidding on them at all, they obviously get affected as a second or third order effect if the whole NFT market comes crashing down.
Two caveats to that from me. One is it seems to be affecting ETH mainnet NFTs the most right now, because, for example, Mad Lads is just chilling at 66 Solana. I haven't checked ordinals in a while. I need to double check with where ordinals are. I think they've just been generally down as well for a little bit of time. So this is predominantly affecting ETH NFTs, and in particular, as I just described, the ones that facilitate leverage on Blend. The ones which don't facilitate leverage on Blend are not kind of unwinding in such an aggressive fashion. Yes, they're also down with the rest of the market, but not quite as much as these other ones. Okay, let's get to a couple of hands. We've got a couple of other really good, interesting headlines today. Obviously, this is the main thing going on, so happy to have focused on this for a bit. Let's go to Funky first. Welcome to the stage, my friend. Nice to have you back. Hope you had a nice holiday. What are your thoughts on the kind of NFT market spiraling down at the moment?
Jim, everybody. I just wanted to actually first and foremost say this was wildly fascinating for someone who's not an NFT trader or a flipper. Just the way that you guys broke down how this market works is really interesting. I also wanted to say that I think this is in line with what we're seeing funding rates across the board in all crypto. You guys started off the show talking about BTC kind of holding this relative strength. It seems as market makers are just intent on trying to squeeze as much as they can. The funding rates are negative across the board on the majors, on all everything else. So I just think we're due for this long correction. I think the CBB situation exacerbated everything, but I do want to thank you guys for showing everything how it works on Blend, stuff like that, because I've never used it and it was really interesting. Thanks.
Appreciate it, man. Glad it was helpful. I do try to do some of these NFT lending breakdowns every now and again. I'm quite involved with it, so I hope that was helpful. Oxy, welcome to the stage, my friend. What are your thoughts? Any questions, observations, comments on how the ETH NFT market seems to be unwinding at the moment?
Yeah, thanks for walking us through the Blend charts. That's super interesting. I second what Funky had said. Something that I've been looking at recently is number of unique holders for like a lot of the blue chip NFT projects. And I know like a lot of this comes in the form of lending and like liquidity on that front. But something I looked at yesterday was unique holders for a lot of these NFT projects are the highest they've been in a year. And then I looked at it again today, and like the percentage change of unique holders is like less than 1% over the last 48 hours. So I'm curious, like your guys' thoughts. I don't have an answer or like a rationale as to why that might be the case, but it's just something I noticed, and I would have thought that, I guess I would have thought there would be some significant changes, whether it's, and I don't think like these blur farmers are doing it over, I guess maybe they are doing it over like hundreds of wallets. So I don't think they are, because they'd want to consolidate the points, but I guess I just don't know that for sure. But I would have thought I would have seen a bigger change for a lot of these projects as far as unique holders are concerned. So just curious your guys' thoughts on that.
Legendary, do you want to say that?
Yeah, absolutely. I mean, CBB was farming with one wallet that is in the top one. In terms of other wallets or bidders splitting their liquidity across multiple wallets, I don't think that this is the case to a massive extent. There might be some in the top 50 who have 2 or 3 wallets in there, but it's very concentrated, as there's not really an incentive, as we've seen a linear distribution so far, to split the farming volume across multiple wallets, maybe other than if you had security concerns and don't want to do everything over one wallet. But per se, there is not really a point, to the best of my knowledge, to do that on 20 wallets versus on one wallet.
Yeah, I think that's a fair response. I don't really have much more to add there. I think it's just a challenging situation for a lot of these high value NFTs, frankly, all NFTs, because you've got to increase the demand. And I can understand why the unhelpful incentives have scared away any demand that might have been there. It's very much been scared away because of these unhelpful incentives. Maybe that can inspire people who want to join a community at some point in time soon to now feel comfortable that they'll be getting in at a more natural price point. But the thing is about these assets is when there's this much leverage kind of wound up in it, it can just get ugly very, very quickly, and it's not clear to me. I certainly wouldn't be able to make a prediction as to how bad it's going to get, because this leverage just needs to be unwound, and some kind of it just needs to play out basically, and it's going to be violent because of the amount of leverage, particularly in those top collections we were speaking about. It will be as violent as much as it's kind of in proportion to how much leverage there is, I think. So we'll just have to see how that plays out. Challenging situation for all of the top collections to face, but maybe it gives people a chance, if you're trying to paint some kind of positive aspect here, for people to get back to trying to increase demand in the absence of these kind of unhelpful incentives. Let's see how it goes. Maybe that will much depend on what happens at the end of this blur season, whether Pac-Man has new plans of how people should be operating on Blur. Could be a new paradigm. Let's see. Happy to have brought that to you though and done that analysis. We've got a couple of other headlines to get to, which I think we should do now. But before we do that, let's just hit the Web3 roundup. There's a bunch of interesting stuff today, so definitely want to touch on those different pieces of news to get you up to speed with what else has been happening in the space. So number one, Athena announces staking with Symbiotic and token sinks for its token ENA. Obviously very interested in what's going on with that synthetic dollar, so I'm watching that closely. Number two, Coinbase. This is big news. Coinbase introduces pre-launch markets with eigen trading starting on June the 18th. That is today. Very interested to see Coinbase entering this pre-market environment. Remember, we've been saying a lot, you can't trust pre-markets. They're just so wrong so often. Very interested to see how Coinbase enters the market, whether that becomes like a better market for determining price of these tokens that are going to come to market a little bit later. Next, Wasabi announces a $3 million raise with Electric Capital, Spencer Ventures, Lucanet, and Meme Fund involved. Next, Doodle Studio migrates to Base in July, so they're moving off Flow. Or certain that the studio aspect is moving off Flow to Base. The main collection will obviously stay where it is. Some more news. Time Fund launches a way to tokenize your time in minutes and lets fans trade and redeem your time. Interesting way to package up your time. Gaga announces Yuga Labs patents will be donated to open source communities. And finally, this token Billy went up 95,000% yesterday to $55 million. Absolutely crazy run. I unfortunately missed it, but I guess it is worth your knowing that. That is the rest of the Web3 roundup to get up to with everything else. We've got a couple of interesting headlines. We've only got about 10 minutes left of the show, so maybe we'll just touch on these relatively quickly. In fact, I don't know how much we want to talk about the Donald Trump coin ledger, so maybe we'll just touch on that quickly first. Do you know much about this? Do you want to take this? I'm not super interested in it, but do you want to take it?
I mean, the quick news is DJT saw a massive pump. Meme coin on Solana. There were rumors that Donald Trump, in whatever way, shape, or form, might make this an official coin. On that, it saw another 460% pump, and that's basically, from my point of view, all there is to say on that. I don't know if you have anything else to add to that.
Yeah, I don't find news which is like either presidential candidate, celeb person launches a coin, makes something official, and the price goes up. Like, that's basically the summary of a lot of those bits of news. Like, X person launches a coin, price goes up X amount. Okay, now it's down. So I don't want to talk about that too much. Let's get into this other headline, which I find very, very interesting, which is the Tether news that they have released, or they are releasing. I'm trying to find the best article for this. Here we go. Tether drops another dollar-pegged stablecoin, but it's backed by gold. So Tether AUSDT is going to use over-collateralized gold reserves to maintain its peg, rather than the usual model of using government debt. So a few more details in this. Tether wrote on Twitter, AUSDT unifies the most popular currency in the world with the store of value used by humanity for the last 5,000 years. They champion the historical strength of gold-backed currencies. Technically speaking, AUSDT is backed over-collateralized by Tether Gold, which is XAUT, a pre-existing Tether stablecoin that is both backed by and price pegged 1-to-1 with 1 troy ounce of gold each. That token currently boasts a 574 million market cap and is currently the largest gold-backed token, with Paxful's PaxG a close second at $428 million. Being over collateralized means a USDT is backed by value exceeding that of the number of its tokens in circulation. This provides a buffer against price drawdowns of gold, which, if large enough, could cause the token to lose its dollar peg. Legendary, I've got a bit more commentary on this from some prominent people on the timeline, but what's your response to this trend of more synthetic dollars being created? Obviously, we've seen Athena creating this synthetic dollar, which has run up to $3.5 billion TVL, and that kind of represents the basis trade, kind of a yield strategy wrapped into the dollar. Now we've got a synthetic dollar with gold as its backing. What are your thoughts on this one in particular?
It's quite interesting that we're kind of running back history, right? I mean, the US dollar in the Bretton Woods system used to be backed by gold from 1944 to 1971. Mm-hmm. And I think it was only then 2 years later that once we figured out in the post-war decades that this system, where 44 countries participated in that, didn't really work. The idea kind of was to have US dollar backed by gold, to have a bit of stability on the one hand. On the other hand, as everything was trading in gold, to have a bit of flexibility for other currencies trading against the dollar. Were massive issues with that turned out over the decades from the 40s to the 70s, also with economies growing very, very fast at that time, that was abolished. And then in 73, the then US president did strike a deal with Saudi Arabia to make crude oil tradable in US dollars only. So to basically kind of switch from hard-pegged dollar currency to soft-pegged petrodollars. Mm-hmm. So it's interesting to see now that we are running this experiment back in our decentralized world of finance. I don't really know what to think of it. But I don't know. I find it, on the one hand, intriguing. On the other hand, it's a system that we kind of proved didn't work out in history. So yeah, I'm a bit, as you can tell, a bit unsure on this one.
Interesting. I mean, I definitely think it will take some more time to digest. I just wanted to share thoughts from Fubar, who is a very prominent thinker on the timeline. He said this: Tether just announced what will likely be their second biggest product ever, a new stablecoin backed by gold. Tether is running the Maker horizontal expansion playbook in the opposite direction, starting with one-to-one treasuries, then expanding into more exotic hybrid and eventually on-chain collateral. This is why he thinks they're well positioned to do this. Number one, stablecoins live and die by their distribution and integrations. Liquidity matters most. That's why people hold USDC and USDT over DAI. That's why Athena is so laser focused on BD. We just mentioned Athena as well, winning all kinds of integrations, both in CeFi and DeFi. Number two, track record of mostly safely custodying over $100 billion of existing RWA collateral is precisely what's needed to bootstrap other RWAs like gold. Centralized control is actually superior to sub-down nonsense because smarter decision-making and less principal agent risk, less likely to burn funds at below market rates, lending to Botswanian bike repair shops. Goes on to kind of share some potential outcomes. Tether is no longer fully aligned with the US government. Previously, stablecoins were perfect tool for Eurodollar 2.0 and extending dollar hegemony. This is actually what I'd always thought. I don't know why people are being so critical of stablecoins, particularly in the US, because this is actually a huge onboarding tool to everyone in the whole world for dollars. It gets everyone in the world wanting to get hold of dollars, and it's great for that. Now, this is obviously a competitor to that because there are other things which represent the dollar but are not actually the dollar. So this is his point here. In gold-backed currencies return to pre-Bretton Woods era didn't end well for Gaddafi, yet Tether government relationships seem to be improving recently. So possibly there's more to the story. He goes on to make a few other points. We're drawing towards the end of the show today, though, so I don't know how much more we want to go into this. The reason I brought it up, because I think it's a definitely interesting addition to the synthetic dollar landscape. Another synthetic dollar to kind of compete for, again, these are not stable coins, but another synthetic dollar to be a part of your allocation to dollars if you should choose to do that. And definitely requires a little bit more thinking, I think. Big news from Tether. definitely requires a little bit more to think about and digest. Legendary, any final reflections before we close out?
Yeah, two final reflections real quick. One, yes, it's a move away from the US government on one hand. On the other hand, I think it's important to also keep in mind that the US government is the largest holder of gold worldwide, with over 8,000 metric tons of gold. Second largest holder is Germany with 3.3K, so less than half of that. And shout out to Tiro in the YouTube comments saying, because we also touched on the debt aspect of it, I look at the debt of US on the clock. I drive by frequently in Cleveland, Ohio, off a major highway. It makes me want to puke. We are fucked.
Not great. Not great situation there. Look, we are over time. Apologies, Funky. We're going to rug it quick here today. Respect everyone's time. We'll be back, of course, with you again tomorrow. Thank you so much for joining us. As always, thank you to my legendary co-host, Legendary, for co-hosting. Thank you to our contributors today, Oxy, Tiro, Funky. And thank you to everyone in the audience. As always, we do this every single day, Monday to Friday, 7 a.m. Eastern Time, 12 p.m. BST. We talk about the NFT market, the crypto market, the stablecoin market, the collapsing digital asset market, and hopefully the pumping digital asset market whenever that day will be very soon. Guys, take care. We'll see you again tomorrow. Goodbye. Have a good one.